Hello, this is Rochelle Agatha, and this is a lecture on the accounting equation. And the first part of the lecture, there was a first lecture that was called Normal Balance and T Accounts. And now we're going to kind of expand on the accounting equation and look a little bit more deeply. So if you recall, assets equal liabilities plus owner's equity. And in the T account lecture, we covered how that looked in T accounts. So go back and watch that lecture if you haven't. Also remember that revenue minus expense equals net income or net loss. And then the change in equity is net income, and we're going to add a little bit here, plus additional investments, less withdrawals. So depending on what class you're in and why you're watching this, the equity section here has been expanded. So there will be times in your accounting classes where you'll be given all of the information you need to do the basic accounting equations. So let's just look at some of these. I just made this up. Earth, Mars, Neptune, and Pluto. So Earth has assets, and then they have liabilities and owner's equity. And you can see I solved for owner's equity by taking the assets minus the liabilities. And that's a very simple thing to have to solve for. Same with Mars, same with Neptune. But let's say that you were not given the assets. All you were given would be the owner's equity and the liabilities, and you had to back into it. And in accounting, they do this to you a lot because they want you to really learn the accounting equation. So let's kind of walk on down the Earth column. So here's at the beginning of the year, these were your assets, your liabilities, and your owner's equity. And notice that they agree that assets is the same as liabilities plus equity. Then at the end of the year, you had to do the same thing. You had assets, liabilities, and you had to solve for equity. So liabilities and equity, notice it's 268, 200. There it is. And then you might be given a problem in accounting where you have to solve for pieces. And Excel is the best way to do this. And so if you're in one of my accounting classes, I'll post this lecture, this Excel sheet inside of the Blackboard class so you can pull it up and look at it. Here in this example, they have this missing additional investment, and they give you withdrawals. That's when the owner takes money out of a company, not salary, but they just pull money out of a company. And they tell you what revenue is, and they tell you what expense is, and then they tell you, you have to start solving from there. So we know what revenue and expense is. So we know that net income is revenue less expense. So you can see that. So it's like if you loved algebra, basic algebra, this is really for you. It's math and it's fun. Then in the problem, you have to find the change in your owner's equity. And that is the change from year to year. So if you see here, I have a formula here, and it's actually subtracting the 2 years owner's equity. So I say my change in owner's equity is beginning equity minus ending equity. So that number comes out to be 64,800. So my missing item must be the difference between the pieces. So let's take a minute and look at my formula. I know my change in equity must be all the pieces that make up the change in equity, and I have a missing piece right here. So if I'm given change in equity and I know withdrawals, revenue, and expense, I can back into the missing piece by subtracting from the change in equity the different pieces. And what's really important here is how I figure out what sign to use. And this goes back to the normal balance lecture, that a revenue is a credit, an expense is a debit, and a withdrawal, as I have up here, a withdrawal decreases equity. So it operates like an expense, so it has a normal debit balance. And by placing this in Excel, I can then validate this number. So if I put the 11,890 in that cell, and I can take my total here, and I can see my, notice I have to have my signs here. You'd have to do the signs, but this is that missing piece right here. So if I have my revenue minus my expense is my net income, and then I have my net income, so let's do it off to the side. So I have 67,310, And then I have withdrawals. So I'm going to say my withdrawals are a minus 14,400. And I have, what else do I have? Let's do the math on those. And that's 52,910. So what am I missing here in my change of equity? Is my 11,890. So I proved it back. So if you're in one of my accounting classes, spend some time when I post this spreadsheet so that you really get a feel for how the pieces of the accounting equation fall through. And this check I just did right here, I have a whole check session down at the bottom, so it proves out the change in equity. So I'm going to do one more. I'm going to do one more column in this lecture so it's not too long. Let's do Pluto, because Pluto is really the hardest. If you didn't know what this was, okay, and you knew the liabilities and the owner's equity, you could figure out that the assets was the total of the liabilities plus the equity here. And notice I added those together, 268. And then if you were given these two and you had to solve for that, you would be have your accounting equation. So your missing item on this one is this number up here. So let's back into it. So we had additional withdrawals, or additional investments, additional withdrawals, revenue, and expense. So we know that net income is the difference between revenue and expense. Notice in this case it's a loss, right? Because my expense is bigger than my revenue. And my change in equity is is coming from the check at the bottom. And the check at the bottom shows me that I have to take my revenue plus my additional investment, notice the F29, minus the withdrawals minus the expenses. And that gives me my 36,000 negative change in equity. And that right there is, let's do the difference. If I do my change in equity, it's 36,000 minus. So just a nice little spreadsheet to test out how to do all of the different pieces of an accounting equation when those dang accounting books give you the little pieces. It's usually in beginning accounting, maybe even a couple chapters in, and you have to solve for it. So once again, make sure you watch the normal balance lecture and the T-account lecture if you were in my class, if you're in any of my accounting classes, and then run through this spreadsheet. I'll post it inside Blackboard, and you can run through it and test it out yourself. If you have any questions, send me an email. Thank you.